You need to see this right now. Silver just crossed $69 per ounce for the first time in human history. Not $50, not the old 1980 record. We're talking about price levels that didn't exist on any chart until 48 hours ago. And if you think you missed it, you haven't seen anything yet. Because what's happening in the physical silver market right now is something I've been tracking for 5 years. And it's finally here. The squeeze everyone laughed about on Reddit in 2021, it's actually happening. And this time, it's not retail traders driving it. It's central banks. It's JP Morgan. And it is a supply crisis that can't be fixed with a tweet or a COMEX margin hike. So if you're holding physical silver right now, congratulations. And if you're not, keep watching, because the next 10 minutes might be the most important financial information you hear all year. Let me show you what triggered this video. 3 days ago, I set up Google alerts for silver squeeze. Yesterday morning, my phone didn't stop buzzing. Forbes published an article titled, "Silver Hits 60 for the First Time. Here's Why Prices Are Outpacing Gold." Now here's what nobody in the mainstream media is telling you. This isn't just a price spike. According to a comprehensive market analysis I'm reading from December 22nd, silver has entered what analysts call price discovery mode. That's a technical term that means there are no resistance levels left. Every chart you pull up right now shows silver trading in blank space above every historical high. And when that happens, the only thing that stops the price from going vertical is either a collapse in demand or a flood of new supply. Neither of those things are coming. Let me break down the 3 structural forces that are causing this, because once you understand them, you'll never look at silver the same way again. First, the supply deficit. Silver has been in a physical deficit for 5 consecutive years. That means more silver is being consumed every year than is being mined. According to the Silver Institute data cited in multiple sources I'm reviewing, the cumulative shortfall since 2021 has reached nearly 800 million ounces. Where's that silver coming from? Existing stockpiles, and those stockpiles are now nearly empty. London inventories, which are the backbone of global silver trading, saw emergency inflows earlier this year just to keep the market functioning. The Shanghai Futures Exchange is reporting the lowest silver stocks in a decade. One analyst from Greenland Investment Management told Bloomberg in October, and I quote, "There was no liquidity available. What we are seeing in silver is entirely unprecedented." Second, industrial demand is exploding. And this is where it gets fascinating, because silver isn't just a shiny rock you buy to protect against inflation. It's the most conductive metal on Earth, and it's become absolutely critical to 3 massive industries: solar panels, electric vehicles, and artificial intelligence data centers. The new TOPCon solar cells require up to 50% more silver than older panels. EVs use 2 to 3 times more silver than gas-powered cars for sensors and battery management systems. And AI? Every high-speed processor, every data center cooling system, every 5G antenna array, they all need silver. According to the market data I'm looking at, industrial silver consumption is now over 230 to 300 million ounces per year, just from solar alone. None of that demand is going away. Third, and this is the part that should terrify anyone betting against silver, the US government just declared it a critical mineral. In November 2025, the US Geological Survey officially added silver to the critical minerals list, citing its vital role in national security and high-tech infrastructure. You know what that means? It means if you're a government procurement officer or a defense contractor, you're now legally obligated to secure silver supplies. It also opens the door for tariffs on foreign silver, which would jack up domestic prices even more. When Forbes reported on this on December 9th, they noted that this designation alone signaled to institutional investors that silver could face supply chain risks and price volatility, which, in Wall Street speak, means buy now before it's $100. Okay, quick pause. If you're still with me right now, I need you to do something. Hit that subscribe button and turn on notifications, because this channel is about to become your early warning system for what happens next in precious metals. Most people who watch this far end up thanking themselves in 6 months when they realize they got positioned before the real mania phase started. Don't be the person who watches this video, nods along, and then does nothing. Future you is depending on present you to take action. All right, let's keep going. Now here's the angle that's going to blow your mind, and it's something I pulled from a recent interview with Andy Schechtman, the CEO of Miles Franklin, one of the largest precious metals dealers in the United States. He was on a live stream on December 18th, talking about silver hitting $67, and he dropped this bombshell: JP Morgan Chase. The bank that was famously short silver for over a decade has reportedly accumulated 750 million ounces of physical silver. That's over $40 billion worth at current prices. And they didn't just cover their shorts, they flipped to being net long. Let me put that in perspective for you. For years, JP Morgan was the biggest bear in the silver market. They'd sell paper silver contracts on the COMEX to suppress the price, rake in profits, and keep the game going. But starting in 2020, they quietly started buying physical silver and stashing it in their vaults. Why? Because they knew what was coming. They knew the supply deficit was real. They knew industrial demand was going to skyrocket. And they knew that when the squeeze finally happened, they wanted to be on the winning side. Now, I can't independently verify the 750 million ounce number that's circulating in the precious metals community based on warehouse data and industry estimates. But what I can tell you is this. If you're JP Morgan and you just spent 5 years accumulating the single largest private stockpile of silver in the world, you're not doing that because you think silver is going to 30. You're doing that because you think it is going to triple digits. So what does this mean for you? Let's talk about 2026, because that's the year this story is either going to make people wealthy or leave them kicking themselves for not paying attention. Right now, silver is trading at $68 to $69 per ounce. The gold to silver ratio has compressed from over 90.1 at the start of 2025 down to about 64.1 today. Historically, that ratio sits between 15:1 and 30:1. If silver continues to catch up to gold, and there's every reason to believe it will, you're looking at a potential move to $100, $120, maybe even $150 per ounce by late 2026. I'm not making that up. Multiple forecasts I've reviewed, including one from Long Forecast published on December 21st, are projecting silver could hit $111 by the end of December 2025, with further upside into 2026. Even the conservative institutional forecasts from Deutsche Bank are calling for an average of 55 per ounce in 2026. And we're already trading above that right now in December 2025. But here's the thing you need to understand. This is not about hitting a number on a chart. This is about a fundamental repricing of silver from commodity to strategic asset. When the US government says silver is critical and Samsung is reportedly buying Mexican silver mines to secure supply for EV batteries, when physical dealers are selling out at $67 in CAN restock, you're not in a speculative bubble. You're in the early innings of a structural bull market that could last years. And if you're wondering whether you should wait for a pullback, let me give you some perspective. Reuters reported on December 12th that silver fell 3% from its record peak as investors took profits. It dropped from $64.64 down to around $61.70 intraday. And you know what happened? It bounced right back and is now at $69. Every dip is getting bought. Every hesitation is getting crushed by the next wave of industrial buyers and institutional money. The market is telling you very clearly there's no patience left for people sitting in cash. All right, I want to hear from you. Drop a single word in the comments right now. Type silver if you think we're going over $75 in the next 30 days. Type gold if you think gold hits $5,000 before silver hits 75. I read every single comment, and it helps me figure out what to cover in tomorrow's video. So take 2 seconds and let me know where you stand. Now, I promised you I'd give you the counter argument because I'm not here to sell you hopium. I'm here to give you the full picture. So let's talk about the bear case. TD Securities and a few other institutional analysts have warned that silver moved too far, too fast in 2025 and could see a retracement to the mid-40s in early 2026. Their argument is that industrial users, solar panel manufacturers, EV makers, electronics companies are going to start thrifting, which is Wall Street jargon for using less silver per unit to cut costs. They'll redesign their products to use thinner coatings, explore substitutes like copper or aluminum, and generally try to reduce their exposure to $70 silver. Is that a real risk? Absolutely. When silver hit $50 in 2011, that's exactly what happened. Industrial demand pulled back, prices crashed, and it took a decade for silver to recover. So why is this time different? 3 reasons. 1, the deficit is worse. In 2011, there was no 5-year structural supply gap. Miners could ramp up production. Today, according to the data I've reviewed, global mined output is actually down about 3% in 2025 due to lower ore grades and a lack of new projects. You can't just turn on new silver mines overnight. It takes 10 to 15 years to bring a new mine from discovery to production. 2, industrial demand is more entrenched. Solar panels in 2011 were niche. EVs didn't exist at scale. AI data centers were science fiction. Today, all 3 are massive, growing industries that don't have viable substitutes for silver at the scale they need. And 3, Naughty Dicks, this time you have central banks and sovereign wealth funds in the mix. When a government designates something as critical, they don't care if it's $40 or $80. They care about securing supply. That's a bid that doesn't go away during a pullback. So yes, could we see a 10% or 15% correction at some point? Sure. But betting on a collapse back to $30 or $40, that's not a risk analysis. That's wishful thinking. Let's get tactical. If you want to position yourself for what's coming, here are your 4 options, from safest to most aggressive. Option 1, physical silver, coins, bars, rounds, anything you can hold in your hand. The premium over spot has been climbing because dealers can't keep inventory, but that premium is cheap insurance compared to missing the next leg higher. If you're new to this, start with 1 ounce rounds or junk silver, pre-1965 US dimes, quarters, and half dollars that are 90% silver. They're recognizable, divisible, and they've been money for longer than the Federal Reserve has existed. Option 2, silver ETFs, the iShares. Silver Trust, ticker SLV, is the easiest way to get exposure if you don't want to deal with storage and insurance. As of December 22nd, SLV is trading around $62, up over 2% on the day, and ETF holdings have been surging. One report I reviewed noted that in just the first week of December, silver ETF holdings jumped by about 590 tons, with SLV reaching its highest level since early 2021. That's institutional money flooding in. If you want leveraged exposure, there's also ProShares Ultra Silver, ticker AGQ, which gives you 2x the daily move. Just know that leverage cuts both ways. Option 3, silver miners. If silver goes from $69 to $100, the miners are going to absolutely explode. First Majestic Silver, ticker AG, is up over 220% in 2025 and is trading around $16.69. Pan American Silver, ticker PAES, is up 146% to $51.77. These are pure play silver producers with high leverage to the metal price. The risk is that miners can underperform if they have operational issues or rising costs. But historically, when silver runs, miners run harder. Option 4, sit tight and watch. If you already own physical silver or miners, congratulations, you're positioned. Don't get cute trying to trade in and out. The overnight gaps in this market are violent. Silver can go from $67 to $61 in a few hours, or from $61 to $69 just as fast. If you're a long-term holder, let it ride. Here's what I want you to take away from this. Silver just did something that hasn't happened in over 40 years. It broke out of a 45-year cup and handle pattern, erased every resistance level on the chart, and entered price discovery mode at the exact moment the world realized it's running out of supply. You've got 5 years of deficits, surging industrial demand from solar, EVs, and AI, central banks buying, JP Morgan flipping long, and the US government declaring it a critical mineral. This isn't a meme stock. This isn't a Ponzi scheme. This is a fundamental supply and demand imbalance playing out in real time, and you're watching it happen. The people who got rich in the 1970s, gold and silver boom, didn't wait for confirmation. They didn't wait for CNBC to tell them it was safe. They saw the writing on the wall, they took a position, and they held on while everyone else laughed. The same thing is happening right now. Mike Maloney, the founder of Gold Silver.com, said in a recent presentation that we are already in the middle of a global monetary reset. It's not coming, it's here. And when fiat currencies are losing purchasing power at this rate, the assets that win are the ones that can't be printed. So here's my challenge to you. Don't just watch this video and move on. Take one action today. Buy an ounce of silver, open a brokerage account, and buy SLV, research First Majestic or Pan American. Do something. Because 6 months from now, when silver is at $85 or $95, and everyone is asking, how did I miss this? You're going to remember this moment. You're going to remember that you had the information, you had the opportunity, and you chose to act while everyone else was still asleep. Before you go, I need you to do me one last favor. Smash that subscribe button if you haven't already, hit the bell so you get notified the second I upload, and drop a comment with one word. Silver if you're in, or waiting if you're still on the fence. I'm tracking this story every single day, and this channel is going to be your source for breaking updates as this squeeze accelerates. The next video is probably going to be about what happens when silver crosses $75, and you're not going to want to miss it. Thank you for watching. Stay sharp, stay positioned, and I'll see you in the next one.